What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. So our dump here has continued. As you can see, we just recently put in a slightly lower low over here. The value proposition of Bitcoin is getting better and better by the day, but is the bottom in yet? We'll have to see. Let's look at some other indicators and charts here. Now, the weekly RSI chart is something we haven't looked at in a while. As you can see, we currently have a higher low here in the RSI, but the price action put in a lower low. So this is very clear bullish divergence that we very often see toward the ends of bear markets. At the same time, this doesn't mean that the bottom is in, because we could very easily create some sort of new bounce here, maybe to like 75 or something, reset the RSI, and then put in another lower low. And this could potentially create another higher low here in the RSI. So we could have double bullish divergence after actually having double bearish divergence at the top. I will show you what I mean. As you can see when looking at the price action, we put in a high, higher high, and then another higher high. So this is a clear uptrend. And the RSI did the exact opposite. We put in a high, a lower high, and another lower high. So we had double bearish divergence. Does this mean that we are guaranteed to have double bullish divergence? Not at all. We don't even know yet if this is the true bottom here before any sort of bounce. But it's definitely something to keep an eye on. Most likely, however, we're at least going to get some sort of bullish divergence here, even if it's not going to be double bullish divergence, because it's very unlikely that the RSI will actually put in a lower low here, because the price would have to crash absolutely massively, which is not what we're really seeing. We're actually seeing a slowdown of the trend. And that's exactly the logic of the pattern. It actually shows an exhaustion of the trend. And another way to illustrate this exhaustion is through the use of wedges. Because even though you can technically draw this wedge pretty much any way you want, you can draw it like this, you can draw it like this, maybe this wedge will actually be drawn like this. It doesn't really matter. What matters is the psychology of the pattern. As we get deeper and deeper into Bitcoin's bear market, it simply becomes more and more difficult to push the price of Bitcoin down even further. Of course, this doesn't have to happen in every market cycle. For example, in this market cycle, we got the famous descending triangle pattern, which had similar volatility compression. By the end of the cycle, nothing was really happening. People were just really complacent. And then we got that final gotcha moment where everybody capitulated and gave up. Now, wedges can also have breakdowns, but they're actually very different. The magnitude of the crash is actually typically much smaller. So they actually end up being fake outs like this. So make no mistake, even though the bottom may not be in yet, we are building a bullish pattern here. And whether the final bottom is going to be 53% or 60%, it doesn't really matter in the grand scheme of things. Next, let's look at some power law indicators. As you can see, we recently broke below this magenta line here, which was not very surprising. And we do have that one last purple line below us, which would be a very, very juicy entry. If you could buy at 46, that would be amazing. But obviously that's not guaranteed. When looking at the decay adjusted power law oscillator, you can see that we have reached dark green territory. So having no exposure here would be incredibly stupid in my opinion, even if theoretically we could go a little bit lower, as you can see historically speaking. And this is the chart everybody's looking at. Bitcoin is currently hovering right at the power law support essentially. We have a few closes below it. You can see a few rejection wicks here actually. And obviously whether we go 5 or 10% below it, it doesn't really matter much in the grand scheme of things. It's just that this 60% deviation line historically has been quite accurate at predicting bottoms, even if we can have some short-term volatility below it. And in this cycle, who knows, maybe we have a little bit more volatility below this line before we actually bottom out. And this is something I have to keep repeating all the time. Just because we go a little bit below or above a certain price, it doesn't mean that the power law is invalid. Obviously, what I'm saying right now doesn't represent Giovanni's opinion, it's just my own opinion. If you look at a chart like this, it doesn't mean that the power law was invalidated over here. It's just normal for certain data points to sometimes be outside of the norm. What matters is the central line. You can obviously draw a trend here. You can draw horizontal lines below and above this power law, but it doesn't mean that there is any specific price that cannot be violated. But meaningfully violating the previous trends becomes increasingly more difficult the further away you get from the power law. So that's the logic here. It's not the answer some people want to hear. Some people can get upset when they hear this, but there are no certainties with things like this. You can scientifically only calculate probabilities. Next, let's look at Bitcoin's realized price. As you can see, we're getting really close to the average purchasing price of Bitcoin right now, which means that soon enough, if the price is going to continue dropping, most people will actually be underwater. And historically speaking, obviously this has been the most amazing buying opportunity you can get in a market cycle. Now, you could make a counter argument that we never reached the red area in this cycle, so maybe we're not going to reach the blue area, and that's absolutely possible. But still, even if we do reach the blue area, maybe we don't simply reach the bottom of it. Maybe we just bottom out somewhere in between, or maybe we just barely dip into it. Who knows? But worst case scenario, this chart indicates the lowest possible price of roughly $40,000. In terms of the price range, let's look at what this actually means. So $40,000 would be a drop of roughly, let's say 68%. And that doesn't sound all that unlikely, to be honest, considering that the last drop was roughly 78%. At the same time, 40K right now seems psychologically exactly like how 12K felt over here. People were waiting for 12K, but we didn't get it. We got to 15K and a lot of people got left behind. So what's the point of all this rambling? I'm just telling you to be smart. Don't put all of your eggs in one basket, because the opportunity cost of missing out on the bottom is way too high, because we're probably going to go to like 200,000 or 300,000 in the next market cycle. Interestingly enough, this on-chain indicator is awfully similar to our power law fitting. They indicate a very similar bottom price. So this one indicates a bottom price of roughly 47,000 and this one indicates 40,000. So they're within the margin of error. It's always good to have confluence when looking at different indicators. And speaking of confluence, let's look at the rainbow chart as well. And it's showing pretty much exactly the same thing. However, I know that they added one extra bottom line here, those sneaky bastards. So keep that in mind. There are lots of different variations of this chart. For example, another version of it added one more purple line below this area once this bottom actually went below the blue line. That's why I don't really take the rainbow chart seriously, but at least let's hope it won't look like an actual rainbow. Next, let's look at the S&P, and as you can see, the S&P is correcting right now. The rally has been absolutely crazy. And if there's going to be some weakness in the stock market, then this is going to put even more downwards pressure on Bitcoin, quite obviously. That's kind of how it works in Bitcoin bear markets. When the stock market rallies, Bitcoin barely increases in value. And when the stock market dumps, Bitcoin dumps even harder. You just have to suck it up. Next, let's see what Minotaur is up to. And I wanted to show you guys this new strategy that we used to only offer to our pro trading desk clients. But now we're also offering it to our retail clients. So you may already know that we like to hedge shorts nowadays, even when we're longing, because it allows us to bring down our average entry price even faster, which in turn allows us to exit the trade in profit faster. But now, in addition to larger longs hedged with smaller shorts, we also have larger shorts hedged with smaller longs. And you would think that all of this would just cancel each other out, but it doesn't, because the longs want to take profit at different levels compared to the shorts, obviously. So the longs will temporarily be in a loss if the price dumps, and vice versa. So it creates a really interesting dynamic. Essentially, it allows you to capture all of this volatility in both directions. So one bot will be taking profit and making money on this move here, and then the other one will be making money on the next move. So you're constantly making money. That's the beauty of it. And when you run both of these together, it essentially allows you to diversify and deal with these tough market conditions better. And obviously, once we're kind of confident that the bottom is in and that we're going to enter a new bull market, you can always turn off the shorting bot. So what's the catch, you might ask? The only catch is that if you have massive volatility, you can get stopped out with one of your bots. But we have calculated this to be rare enough to not impact your profits too much. By the way, our CoinM integration with Blowfin is now fully functional as well. So if you want to use your Bitcoin as collateral to mine more Bitcoin, feel free to use the link in the description to get access to the bot. We still also have this great promotion going, so you can test out the bot for free for the first 7 days, so you can get onboarded and everything, after which you can continue testing the bot for $50 a week. You can then choose to continue with the weekly payments or purchase the bot outright. You're not locked into anything, there are no gotchas, so it's a no-brainer. And I will also personally help you set up your bot and help you manage your bot over time. I know it doesn't seem like it, but right now really is the best time to start with algorithmic trading because the vast majority of the risk is already behind us. When looking at the precious metals, you can see that both gold and silver are still in their own bear markets. As you can see, gold just put in a new lower low again, and so did silver. The reality is that all of the capital has been flowing into AI stocks, which have been propping up the stock market as well. But I do believe that in the next market cycle, all of this capital is going to flow back into Bitcoin. And when looking at Bitcoin again, you can see that we are currently breaking below the 200-week moving average. And I've been telling you guys that this is not a magical line anymore that will just stop Bitcoin's descent. We did break below this line in the previous cycle as well. But you can't go wrong buying below the 200-week moving average, historically speaking. And here's a quick update on my macro long position. I am currently in one trade already, and there will be 2 more trades in this ladder at roughly 55 and 50,000. Now, if Bitcoin does decide to dump even further, then I can add a few more positions here at lower levels to bring my average down from a projected 55 to maybe 50,000 or so, or even the high 40s. Obviously, all of this is calculated to be sustainable because if you want to have like 75% liquidation protection to the downside, in addition to the 1 Bitcoin that is backing up your position, you need 2 more Bitcoins for a total of 3 Bitcoins per 1 Bitcoin long. So that means that you cannot just infinitely increase your position size. You need to stop at a reasonable point. With Bitcoin collateral, you do sadly have really diminishing returns. So with 1 Bitcoin backing up a 1 Bitcoin position, you would have a 50% protection to the downside. If you double that, you would get to 66%. And then with 3 Bitcoins, you would have a 75% protection. And because of this, you do really have to be picky with your entries when dealing with leverage, even when you're dealing with very low leverage. As a result, we may never hit these lower targets here, but oh well, that's something I'm willing to risk. And the only reason why I'm still even projecting these types of levels is because timing-wise, we should not be at the bear market bottom right now. Historically speaking, the bottom typically happens exactly 1 year after the top. So either in like October, November, or December. And right now, we're still in June. And to wrap things up, when looking at the Wall Street cheat sheet, I do believe we're currently in the anger phase. So there's a possibility of a slightly lower low. Maybe we get this depression phase where everybody just completely gives up. I mean, we are already seeing a lot of people right now giving up on Bitcoin, saying that they're getting out of the market and everything. So I think that this will get a little bit worse over time. Typically speaking, these bottoms take a few months to form. We don't have V bottoms most of the time during Bitcoin bear markets. Anyway, guys, make sure to join our Telegram group as well, and I'll be seeing you soon.